Let us start with the first problem. So what is given in this problem is on 1st April 2022, Mr. Rajesh holds 20,000 equity shares of rupees 10 each in H Limited at a cost of rupees 3 lakh. So this is on 1st April what holding here, that is the balance brought down. Okay, so in the beginning of the year, what balance is he's bringing to the year 1st April 2022 till 31st March 2023. In this year, how much he has brought in. Then on 1st July, he is making a purchase. He's making a purchase of 4,000 additional shares at cost of 64,000. So you need not multiply anything. You get a direct cost column value 64,000. Then on 1st October, the company is issuing bonus shares. So the company H Limited is issuing bonus shares. So over there, 1 share for every 6 shares held is on that date. This information is given. On 1st January 2023, he purchased rights shares announced by the company. So company on 1st January has announced rights shares. So rights shares are also given. They've given the rate, that is 2 shares for every 5 shares held. So these things which are given here, bonus shares and right share, these are the ratios in which. See in this problem with regards to bonus shares, how they are giving, they have given it in the word form. Otherwise in some problems they might give you the ratio directly. So what they have said, 1 share for every 6 shares held by the investor. So 1 share is to 6. And in case of right shares, 2 shares for every 5 shares held. So 2 is to 5 is the ratio. And they have also given as on that date, means as on 1st January 2023 at rupees 12 each. So whatever number of right shares you are getting as an investor, Mr. Rajesh is getting, those will be purchased at rupees 12 each share. Next is he purchased again on 31st January 2023. He purchased 2,000 additional shares at the cost of 36,000. And then on 1st February 2023, he sold 1,000 shares of rupees 20 each. So here you will have to calculate the cost value, that is 1,000 into 20, you will get the cost column value. You are asked to prepare investment account, equity shares account in the books of Mr. Rajesh for the year ended 31st March 2023. So the solution will start with in the books of Mr. Rajesh, investment in equity shares in H Limited. So how we have to prepare this account, similarly like how we were preparing for debentures investment, date, particulars, working note, nominal value column, dividend column, cost column, date, particulars, working note, nominal value, dividend and cost column. So as per our first transaction, that is Mr. Rajesh is holding 20,000 equity shares on 1st April of rupees 10 each. So 20,000 into 10 will be our nominal value. So 20,000 into 10, this amount will go in the nominal value column, and 3 lakh will go to the cost column. There is no difference. So we'll make the entry. So the entry will appear as 1st April 2022 to balance brought down. Working note number 1, 2 lakh dash cost column 3 lakh. So working note you can prepare like this. Working note, 20,000 equity shares into rupees 10 is equal to 2 lakh and cost is 30,000. This is just for your understanding so that you are keeping track of the amounts. Now you don't lose anywhere where you have to keep nominal value, how much nominal value you have to take. Now let us see the second transaction that is happening. On 1st July 2022, he purchased 4,000 additional shares. Now since 4,000 shares he is purchasing, any purchase, the entry will be made on the debit side of the account as to bank. So we'll make an entry, that is 1st July 2022 to bank that is the purchase entry. Working note 2 I am written because I am preparing a working note 2. So how many shares we are purchasing is 4,000. So nominal value will be 4,000 into, as per the first entry, first working note we have prepared, the face value given in the first transaction was rupees 10. So that is, with that we are going to always calculate the nominal value. So 4,000 into 10, our nominal value is 40,000. So we'll may enter it over here in case of this thing. So 40,000 is a nominal value, and 64,000 is directly given in the question itself. So we'll enter it here in the cost column, 64,000. The third transaction happened on 1st October 2022. Company issued bonus shares of 1 share for every 6 shares held as on that date. So we have the ratio of bonus shares. As per that, we will see how many shares we are supposed to get. Now this working note number 3 is going to be about the issue of bonus share, that how many bonus shares we are getting. So ratio is 1:6, right? So we'll write bonus shares and shares held. So what the ratio is saying, 1 share. For every 1 share that you are holding, you will get, for every you will get 1 bonus share for every 6 shares held by you. So in this problem, as per this problem, how many shares we are holding right now? See, in the first case we have 20,000 shares we had as per this. In the first transaction, Rajesh hold 20,000 equity shares plus 4,000 he has purchased additional shares, and then bonus was given. So how many we are holding equity shares? 20,000 plus 4,000. So total 24,000 shares Mr. Rajesh is holding. So if for one he gets 1 bonus share for 6 shares held, for 24,000 shares held, how much he should be getting? We will cross multiply and we'll find out. So 24,000 into 1 divide by 6, you get 4,000. So Mr. Rajesh is getting 4,000 bonus shares. Now 4,000 is number of shares. We need to find the nominal value of these. So 4,000 into rupees 10, we get 40,000 as a nominal value, which we will enter over here. So on the 1st of October 2022, to bank bonus share transaction, it is working note number 3, 40,000 comes in the nominal value column. Dividend and cost column remains nil. Cost column, no amount will come since we are not purchasing these bonus shares, but we are getting this nominal value bonus shares for free from the company. Let us now see the next transaction. On 1st January 2023, he purchased rights shares announced by company at the rate of 2 shares for every 5 share held as on that date at rupees 12 each. So he has purchased, Mr. Rajesh is purchasing rights shares given by the company or announced by the company. And the ratio is 2:5. 2 shares for every 5 shares held. So the working note will be made like this. So we'll write the date, rights shares purchased, ratio at rupees 12 each. That also we are going to write. So rights shares and held shares. So 2 shares will get, 2 rights shares will get for every 5 shares held. So right now how many shares we are holding is 28. So how am I getting 28 is, as I said, for bonus share we had 24,000, right? And then we got additional 4,000 bonus shares. So 24 plus 4,000, it would be 28,000. Okay. See, if you see here also, you can identify how many shares you are having. Nominal value is always we find out with number of shares multiplied by 10. So 10 you minus from here. So 20,000 shares are here, 4,000 shares are here. So that becomes 24,000 plus another 4,000 shares of bonus shares we got. So it becomes 28,000. So same way like how we found out bonus shares, we'll cross multiply and we'll get 11,200 as right shares. Now right shares nominal value we have to find out. So 11,200 shares into rupees 10. Nominal value column will go 1,12,000. And in case of cost column, 11,200 shares, right shares we have purchased at rupees 12 each. So rupees 12 into 1,34,004. This will go to the cost column. So here is how the entry is. On 1st January 2023 to bank, right shares, working note number 4, nominal value column 1,12,000 and cost column 1,34,400. We will move ahead with the next transaction that is taking place on 31st January 2023. He purchased 2,000 additional shares from the company at cost of 36,000. So this also will make an entry. First we'll see the working note. Working note number 5. Okay. Purchase 2,000 at rupees 36. So nominal value column will be 2,000 into 10, 20,000 and cost column 36,000. Here see, to bank purchase entry, it is working note number 5, 20,000 nominal value column and cost column 36,000. The next transaction that is taking place is on 1st February 2023. He sold 1,000 shares of rupees 20 each. So we'll do this transaction. Working note number 6. Okay, on 1st February sold 1,000 shares at rupees 20 each. So 1,000 shares into 10, you get the nominal value 10,000. Cost is 1,000 into rupees 20. Cost of those sold shares is 20,000. So you are getting 20,000 from the sale of 1,000 shares. So 10,000 goes to the, we'll see the sale entry. That would be anytime purchase is made, purchases come on the debit side of investment account, sales come on the credit side of investment account. So 1st February 2023 by bank, working note number 6, nominal value column 10,000 and cost column 20,000. Now see, whenever sale is made, we are selling something, so we will either, when we are selling something, we will either incur profit or loss. So to calculate that, I have done this working note over here. So calculation of profit and loss on sale of investment. So sold at cost. So what is the cost price of that investment that we have sold? Is cost is 20,000 that I am writing here, less the average cost we have to see. Now this thing we need to find out. Okay, so this amount we need to find out. How we are going to find out is prepare a separate working note over here at the side somewhere, or even after that you can do. So what I have done is that I have written the nominal value and cost columns are made. So first thing that I am writing a balance product. So if you see the first transaction we had